man, to a huge week for Bitcoin. Will this be the week which finally decides whether we have the green light to start rallying back again on Bitcoin, or whether we could be crashing back to those $15,000 lows? We have the CPI reading just days away on Tuesday. We've then got Jerome Powell and his interest rate decision on Wednesday. Loads to cover off this week, loads which can move the market. We're going to break down exactly what's happening, what the consensus estimates are, and how these could move the markets. Don't forget to smash some likes, don't forget to subscribe. As always, check out the links in the description if you want to buy any cryptocurrency. And as you can see, Bitcoin is sitting here at 17,100. And the reality is, over the last 10 or 11 days, we've been pretty range bound. We initially, on the 30th of November, had this nice breakout from this triangle pattern. This took us to the high on this candle of 17,300, just shy of that level. And then we've just been consolidating around this range. It's been very low volatility. And we've just not seen any of that big volume move. You can see the volumes have been declining here, as you would expect going into December. I don't expect that to fundamentally change, apart from around the key catalyst which we have this week. And that is what I want to break down for you guys today, because we have some critical catalysts. And I want to start off by taking this all the way to the top, because there's loads to cover off this week. But the first thing is on Tuesday, and that is going to be our CPI reading. We get the US Consumer Price Index month on month and year-on-year figures. Now, why is this so important? We know this has been the narrative of this whole bear market, is the fact that inflation is out of control and the Fed needs to have been continually hiking rates in order to make this under control, to bring this under control. Now, we know that currently markets, 78% of markets are expecting that we're finally going to see that pivot from a 75 base point rate hike, which we've had 4 of, by the way, to a 50 base point rate hike on Wednesday. So not far away now. On Wednesday, 80% of the market have priced that in. But if we take a look at what the expectations are, inflation on Tuesday, CPI inflation, the headline inflation figure is expected to come from 7.7 down to 7.3. Anything which surprises to the upsides, even 7.3, 7.4, 7.5, will not be happy for the markets. We will see some pain in the markets. Why? Because the market is already front run. The market, like I just showed you, 80% of the market is already expecting 50 base points. Because Jerome Powell was so dovish in his last comments about a week or so ago, markets have gone in and priced in the fact that we're getting 50 basis points. Now, don't forget, we've already had a mixed bag in terms of the labor. So this is the final piece of data Jerome Powell gets before he makes his decision on Wednesday. So that's the figure. We're expecting 7.3. Anything lower, we're in rally mode. Things are going to be really good if we see 7.2, 7.1, 7 flat. Market will be really excited. Remember, if we look at the line chart, you want to see this come down steeply. So it's not just the fact that it's coming down, but what's the rate that it's coming down? So this rate is what we want to see it come down sharply. And anything coming towards that 7 mark will be hugely positively received by the markets. We also need to look at the core inflation rate as well. We can't just look at the normal inflation. The core inflation rate has been sitting at 6.3. This is expected finally to come down a decent chunk down to 6.1, which will be the lowest level seen since July time, okay, when it was 5.9 on the month on the year-on-year figure. So we want to see that come in at 6.1. Again, anything around 6.2, 6.3, markets will not be happy. Anything at 6.1 or lower, we could be seeing the green light for a rally ahead. And then once we've got that on Tuesday, we go straight into the Wednesday when the FOMC meeting will culminate to find out, are we actually going to get that 50 base points, which signifies the first pivot, which would be great for markets. Because you've got to remember, what is the context of what markets have been through? Markets have just seen 475 base point rate hikes. At one point, the market was pricing in a 100 base point rate hike. Right, so if we finally see that pivot, this is a major milestone for the markets in this tightening cycle, because we can almost say, okay, 75 base point was the biggest chunk. We dealt with it 4 times. Now we can have a couple of 50 base points maybe, and eventually we can see the light at the end of the tunnel. Maybe we're going to get that 25 base points and we can start to improve moving forward. So that's going to be an important level for markets, is do we see that 50 base points? Now remember, it's not just the rate hike, because to all intents and purposes, 80% of the market is priced in 50 base points. So if we see 50 base points, I don't expect a massive rally. I do expect a little bit of a rally, and we'll come onto the charts to see what that could mean for Bitcoin. But the market's already front run. The markets are already priced in the fact that we'll see 50 base points. So the risk going into Wednesday is more for the other side. What if Jerome Powell decides over the next couple of days, because he'll get early release of the CPI reading, what if he sits there with the team and they discuss and go, oh, maybe we're getting a little bit excited. When I made those last remarks about 50 base points, that's after a positive ADP jobs report. Since then, we had a tight labor market on the non-farm payrolls. CPI reading on Tuesday, if that comes out negatively, Jerome Powell may want to U-turn. He may flip-flop. So we've got to be very, very careful right now. The other thing, which is going to be really important, which a lot of people aren't speaking about, is after the at the time of the release of the interest rate decision, we're also going to get a summary of economic projections. This doesn't come out with every release, but investors will be looking to this key piece of data, including crypto investors, because this will give the Fed's idea of where they think inflation is going to go, where do they see unemployment going, where do they see wages going, and where do they see GDP going as well. So we will be breaking that down together because that is important. You don't get that with every FOMC meeting, so that will be moving markets as well. Then, finally, if you're keeping up with me, we then get the press conference, which is where Jerome Powell comes out, delivers a statement, and then takes questions. Again, that can move the market. So loads to pack in this week. You've also got other central banks doing their thing as well, the UK ECB press conference as well. So this is a huge week in terms of the global tightening or softening of stance in terms of a monetary policy. We know that US has actually made some good headroads in terms of inflation, but it's still nowhere near where Jerome Powell wants to get it to, right? He wants to get back down to that 2% target range. He's not changed his opinion on that. And markets over the last week or so have started to become a little bit tentative. They're not sure if he can actually achieve this soft landing. So that's the narrative of this week. And again, if we see the positive scenario, which I just explained, I wouldn't be surprised to see Bitcoin reclaim that 17,600 level. And I think that is the best case scenario over these next couple of days. If we can get positive enough news in the markets that Bitcoin decides it's going to reclaim those June lows of 17,600, it's not going to get rejected, and it actually builds above it and starts working its way towards 18,000, that would be a really positive week here for Bitcoin. I think when you then look back at it, say, okay, only a couple of weeks ago on the 21st of November, we were sitting at 15,500 and potentially we could be back at 18,000. I think that would be the perfect scenario. If we get a negative CPI, if we get a bad CPI reading to the point that Jerome Powell needs to come out really hawkish again, because remember, he can do 50 base points but still be really hawkish and upset markets. Right? He could do 50 base points and still say to markets, guys, I'm not taking 75 base points off the table for the next meeting, right? He can say a lot of things which will spook the markets. Then I will be looking at 16,200 again. And potentially, if it's a horror show, could we be falling back down to those 15,500 levels? Now, it's important to note, all of this is based on the fact that we have correlated with traditional markets. You always have to layer on top with crypto the risk that anything crypto specific could throw us off course. Things like the FTX saga, things like Luna, things like Celsius, all these things can always throw us off course from what the traditional markets are doing, which was really unfortunate when the traditional markets were rallying a couple of weeks ago and we could not participate because of the FTX saga unwinding. Okay, a few of the interesting points I did want to pick up with you guys, and the first of which is an article I saw posted about Chris over at Crypto.com. Anybody who knows Chris Marszalek is the CEO over at Crypto.com, and there's now articles coming out to say, that he has had a few, let's say, not so clean experiences in the past, including going bankrupt at 30 and not paying back suppliers millions of dollars. And you guys can go and read this. I don't want to spread FUD. I don't think that's the purpose of this. And I'm going to show you both sides of the story as well, just so we can understand. But it's important that we're doing this exercise. And I think it's good that journalists are putting these exercises. Look, Chris won't take to it positively. I mean, he came out and he said more FUD targeting Crypto.com is coming. I don't think that's right. I don't think and by the way, we'll come on to the rest of his tweet that he says here, because he does a good job of explaining what happened, to be fair. But what's not helpful is if a journalist does their job and points out things in your past which you haven't been open with already, you can't just call it FUD. Just address it like you've done in this tweet storm, but you can't just call it FUD. I think it's you have a public obligation to go and address these concerns. There's nothing wrong with that. And I think part of this is what led to the FTX collapse. None of these journalists, none of these people in positions, VC funds, and all these other people doing due diligence ever digged in to ask the questions. So it's good now that we're asking the questions. Ask the questions about CZ. Ask the questions about Chris at Crypto.com. Ask the questions about Ben over at Bybit. Ask the questions about the Tron, Justin Sun, right? Go ask the question about Brian Armstrong at Coinbase. Do that. Journalists, do your work. Ask those questions. It's good. And guys, if any of those founders have anything to hide, you'll find out, because they won't be forthcoming in what actually happened. So credit to Chris. He actually came out and addressed the concerns here, and he explained what happened. Feel free to go read this on his Twitter. He said, I had a few failed businesses and these things happen. I paid everyone back in full and et cetera, got cleared by the court and no issues like that. But the reality is there's always no smoke with fire. So these things are really important to add to your knowledge base, right? I mean, similar with Alex Mahinsky. I never sat right with me, which is one of the reasons I never participated in Celsius, amongst many other reasons. But Alex Mahinsky's past didn't sit right with me. He had a few failed businesses in traditional finance. And whilst that doesn't mean, oh, look, nobody with a failed past in traditional finance can do well in crypto, that's not what I'm saying. What I'm saying is when I see somebody who's time after time shown certain traits and characteristics in traditional finance, and then suddenly they're trying to play the same game in a less regulated space that is crypto, that raises a red flag for me. And that is why I've always said on this channel, on tweet posts I've made, saying, guys, be over transparent. The regulation might not ask you to be transparent, but if you're in a position of power, if you're an exchange owner, if you're a big fund in the crypto space, over index on transparency and you cannot go wrong in this space. That is what's going to give us confidence. And if you're not, don't be upset when we question your past. Don't be upset when we find something or an investigative journalist digs something up and wants to ask the question. You should then come out with no ego, address it, because if there's no issue, you shouldn't have an issue, right? Because the reality is if crypto.com is solvent, and by the way, he does share that as well. They done their proof of reserves using Mazars Group, the same place that Binance used, and it's showing that they're over collateralized, which is good. They've got enough reserves to cover the in-scope assets. Now, great. Right? But over-index on this stuff. Why did it take FTX and then Binance to say we're going to do proof of reserves for everybody to do now proof of reserve? Why was this not the standard? Right? Over-index on this stuff. Give us more. Give us your liabilities. Give us everything so we can see it. Over-index on that transparency. Just wanted to bring that up to your attention, guys. Fear and greed index sitting here at 26. Markets aren't feeling too bad right now. Remember, just a couple of weeks ago, we're at 15,500. We've got a little bit of a footing here at 17,200. We're going into a key week with CPI, inflation, and Jerome Powell. Remember, guys, also this article was interesting as well. Sam Bankman-Fried's Alameda Research secretly funded crypto media site The Block and its CEO. And this is interesting. And the reason I wanted to mention this to you guys is you've got to be careful where you're consuming data from. Just like I say to you, be careful with your stable coins, be careful with the exchanges you're using. You've got to be careful where you're consuming data from. You may think, oh, I'm just on CoinDesk website like I am right now, and I'm consuming data like this. But who do you know who owns this? This is owned by Grayscale, which then who are then in bed with Genesis, which are therefore linked with XYZ. You need to be able to follow the path of what's going on, and that is why it's really important you have a blend of sources of data. Just like you should have a blend of YouTubers that you watch. You should have a blend of different websites which you take content from, a blend of different Twitter accounts you follow. You should have a blend of different exchanges. Are you getting the point now? Everything should be diversified. If you find yourself as that type of person where I only read CoinDesk and I only use Binance and I love one project, that's what's going to get you wrecked in the crypto space, right? If you're that person who only ever use CoinDesk as a website and only ever use FTX, you're in a bubble. And that is why it's important you diversify your streams of information, you diversify your streams of income into different assets, and you diversify your exchanges, your stable coins, and the rest of it. So there you have it, guys, a critical week. I will be here with you guys navigating through the CPI reading, through the FOMC, the summary of economic projections, and all the other things that come up this week as we see a volatile week ahead for crypto. Can we reclaim that 17,600 level mark? Because that's going to be the key to getting us working up the ladder back to some exciting price levels on Bitcoin. Let me know what you guys are up to in the markets as we speak. Don't forget to smash up likes and subscribe. Check out this video here where I go through which coins I think are going to survive this bear market and which coins I think can return back to their all-time highs quite comfortably. Thanks for watching, guys, and I'll see you in the next one.